Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Tuesday. What up, everybody? Welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had an absolutely amazing trading day yesterday on what was essentially our biggest day of 2019. So I hope you guys all had a trading day where you stuck with the trend, because remember, the trend is your friend, and we're going to talk a little bit about that today. For those of you new to the channel, do me a favor, click that subscribe button down below so you get the alerts and the updates as they come available and out to you. And then if you are not new to the channel, do me a favor, leave a comment, leave a like, leave a thumbs up, share it with a friend, do something, help a brother out. Let's spread the word about the DMC. All right, let's dive right in. So the S&P this morning, we are up about 22 points. So, taking back a little bit of yesterday's drop, we had a huge sell-off yesterday. And for those of you that were in our live trading room, we had talked about the fact that there was a potential for a gap and go. So those of you that were in the live trading room, how many of you held on for the gap and go that we talked about on our Sunday night live trade room? I'd love to hear that in the comment section down below, because it was a really strong run off of that gap and go move where we gapped down and just kind of continued the run. But if you got in late yesterday, you saw that we had a bit of a rally towards the end of the day. And I would call that a little bit of a short covering rally heading into the close, and then a little bit of a sell-off. And we've been rallying up in the Globex session overall. So now what I'm looking at is, where did this drop really pick up steam? Did it accentuate it? And I'm going to come to this top up here. We have this area up here, which was the 15-minute chart. I'm going to take that one off in favor of this one here on the hourly level, seeing if we get a bit of a rally at some point today. I'll be quite frank, I don't know that we're going to make it that high. Something tells me that when we open up, we may reverse actually before that. And if you look here on the 15-minute chart, there's a little bit of a wick over wick level here on the 15-minute chart. And I don't normally take wick over wick levels on 15-minute charts, because they're really just base drops on 5-minute charts. And I don't really trade the 5-minute time period. But I'm going to put it in here based upon your risk tolerance. You might be willing to take that. Okay, so now there's room, by the way, to run it all the way up to there. That's still 18 points away from here. So if we break out above here, you may get an opportunity to run it a bit higher from this level, as we've just kind of been basing below there. So I'm actually okay with any of those scenarios today, moving on the S&P. In the Nasdaq, so in the NQ, I did believe that we would slow down, at least at this area here. But remember, one of the things that I talk a lot about, a lot of people look for the supply-demand curve, and they look for the extremes of supply and demand. And if I've said it once, I've said it 1,000 times. Trend trumps curve. Trend trumps the supply-demand curve on that major time period. It's going to search for demand on the next bigger time period. And so, I believe that we have to keep going to a daily or even a weekly level of demand before we find some true support. So we are, hitting this little level of demand, and that's where our green candlestick comes from so far on the daily chart. And so it went through that little hourly level as we would anticipate, right? So now here's the question. How high does it go back up? And one of the shapes, for those of you that watch the DMC pretty regularly, one of the shapes that I really like is this, right? So I call that a bear rally or a bull pullback. I love that, because that to me gives me an opportunity to take advantage of the next impulsive move up, or in this case, the next impulsive move down, right? And so when I'm looking at this position, my eyes are kind of fixated on these wick over wick areas here on the 4-hour chart, which when I move to the 1 hour should be a bit easier to see. And on the 1 hour, it's this same kind of area that we have in the S&P right here. So I'm going to take this one off again. Difference being is that this one was formed right around the European market open, although it still may be valid. I'm going to put this one on right now for our reversal. Crude oil was our best trade of the day yesterday. Leave me a comment below if you caught the crude oil trade. It just wicked up right into our tiny, tiny little supply area. Came down and hit target 1, and then it hit target 2 before starting to reverse. So now what am I looking at? Well, now I'm looking at, as prices continuing to go higher, do I have a little bit of supply up here that may stall? Okay, so Keep an eye on this little supply up here. I would use it as a confirmation entry at this point, but I don't even really have basing heading into the level. But let's use that as a confirmation entry at this point. And then gold. Now gold, kept looking at gold as a potential. Gold just blew right through our supply levels. I mean, just absolutely annihilated them. And this is why we had a confirmation level here to really kind of tell us, should we even bother getting into this thing? And it blew right through it. So small loss in gold is more than made up for the gain in oil. And that would be kind of what we're looking at in gold. Now, when I go to gold on a 4-hour, we've now broken out of that sideways price action. We have an upward trend, right? So now that we have an upward trend direction, I can look to be a buyer on a decent pullback. And I'm going to look right now at this little tiny wick over wick area. I mean, it is minute in here, but it does still exist, right? This tiny 1292, 6 by 1292. So tiny little level, tiny little zone there for us to kind of take a look at and identify. So on the bonds, what we're looking at here is the ZN, which is our 10-year note. And on our 10-year note, we rallied up and went through our confirmation entry, which means no entry. I always remember what those confirmation entries mean. And if it trades through the level before coming back out, then it's no longer going to be valid. So we have a good solid upward trend at this point, looking at it on the 4-hour chart. But I don't, these are so wicky. The price action is just ugly, right? I don't really love this price action. And so I'm going to let this one be for now. I'm not going to add anything to this list. Our Aussie breakdown working out very well. Leave me a comment below if you took the Aussie breakdown. I said yesterday to move your stop to break even, so there's no reason for you to have been stopped out as it's still continuing its move. You may want to take a little bit of money off the table if you choose to, but the Aussie breakdown still working out just fine. The euro on a breakout to the upside, not so much. So the euro, we had talked about this as a potential breakout. We got our move, and then 1, 2, 3, 4, 5, 6 candles later, we still hadn't gone anywhere, right? So technically our stop on the breakout would be below here because this is our last pivot before the breakout. I guess you could argue that it's in here. But realistically, you should be out of this trade with a very small loss, not even your maximum stop out. This one did not work out as well as we would have hoped on the breakout. So the Aussie trade, yes. The euro trade, no. And by the way, that's life, right? I mean, that's what happens. But if you notice on both of our stop outs are significantly smaller than our gains on the others, and that's really what we want to do. I put a picture up a couple of weeks ago on social media and Instagram. And by the way, follow us on Twitter and Instagram. But one of the things I said was aim small, miss small, aim big, miss big. Well, in trading, we want to aim big and miss small. Right? Aim big and miss small. That's really ultimately what we want to do. And so when I look at this, I'm going to come to this level right here on the 15-minute chart of the euro. And this 15-minute chart on the euro, let me switch this to a purple line because we found that on the 15-minute. Is this little tiny wick area right here. So that would be our level on the euro. Canadian dollar, we're still in between our levels. We had a really nice trade off of it a couple of days ago, but it's still kind of in between our levels, not doing a whole heck of a lot. Great British Pound and Japanese Yen. So the pound, we got our 6-candle rule was in effect. If you notice, price came into the level 1, 2, 3, 4, 5, 6, hadn't gone anywhere. So essentially, it's a break-even trade. Right? So this one should be out at break even. And this is what I talk about. This is why I talk about the 6-candle rule. If it hasn't started making your move in about 6 candles, it's probably not going to make the move. And so we want to make sure that we close those positions out without taking a loss. So that should be about a break even position. And then the Japanese yen, we actually came really close to our supply level and started to work our way down. Now, interestingly enough, we were able to put in a lower swing low here. In this setup, when I go to the 4-hour, I'm still in an upward trend. But if we put in a lower swing low and a lower swing high, then that trend direction will change. So if you're a bit more aggressive, if you want to be more aggressive, I think you can try a little bitty short right here. Now, the time of day is not good. Your time of day here is not amazing. but you may get a decent entry right here off of this one. So that's what I have for today. Just keep an eye on your levels. Make sure that you trade your plan. If you got any questions, please send me an email, support@tradersarmy.com. Until tomorrow, everybody, I will see you soon. Later.